Short term, I think the dollar falls a bit further, might even get down to 95 in the DXY. So that's the unwind, the A, it's where it goes back again. But structurally, the dollar's in an uptrend, and it's driven in an uptrend because 85% of world trade is in dollars, 400% of GDP in debt is dollar-denominated debt. So we've got a structural shortage of dollars, and that shortage of dollars, either in times of crisis or times of boom, tends to drive the dollar higher. So still remain a dollar bull.
Hey guys, welcome back to Library of Wealth. Today we have Raoul giving us his investment strategy on assets such as stocks, Bitcoin, and other cryptocurrencies. Powell believes that the debt system will not burst, but gradually fade away, owing to the government's recourse to quantitative easing. He sees the government as printing money indefinitely to maintain the value of assets and fend off insolvency. On the flip side, Powell maintains his stance on investing in cryptocurrency and says that the shortage of dollars could drive its value even higher. Let's get right into the interview with Raoul Powell as he gives us his market outlook for the first quarter of 2023 and what his investment strategy and prediction is for crypto. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Do you believe there's a chance that the debt bubble would eventually burst? Obviously, we've all thought a lot about this topic, and I've been writing a lot in Global Macro Investor about this. And I think the answer is it cannot burst. A, they can't allow it to because it's too catastrophic. But B, quantitative easing means that they'll never burst. So the government can just endlessly finance itself, print more money, and they can endlessly print more money to make sure that the value of assets, the collateral of the system, goes up, and therefore nobody's insolvent. We saw that in 2020. And I think that was the big signal for me, is they can't allow the insolvency. Remember, I had that insolvency phase idea? Well, that never happened. And what stopped it is the Fed came in and said, no, sorry, your collateral's not going to go to zero. And so don't forget, we've got this massive pension system, and the liabilities there are a huge problem as well. So they just can't allow it to happen. So I do not think the debt system bursts. I think it dies in different ways. I actually think it dies from, over time, I think they have to get GDP growth above debt growth. And that's going to take time. I think it's going to take a change in the demographic, i.e. the dying off of the baby boomer population. And then GDP growth driven by technology, and productivity growth has to go up. So it's actually a long-term game, and I think they'll hang it out for as long as possible, much like Japan has been doing and Europe's been doing. I think it's a long-term game, and what we get is the debasement of assets to counteract it, debasement of currency, which leads to higher asset prices and everybody getting more and more angry because the markets never go down. So I actually think that is how the world works now. And I know people don't want to believe it, and everyone just wants, see, they blew up the system. I think you're going to blow up yourself if you try and fight that game. I think we just proved it again. And I am all in still in crypto, so about that. What about the dollar? Good question. Seen a few of those wing by. Just Ray. Short and long term. Short term, I think the dollar falls a bit further, might even get down to 95 in the DXY. So that's the unwind, the A, it's where it goes back again. But structurally, the dollar's in an uptrend, and it's driven in an uptrend because 85% of world trade is in dollars, 400% of GDP in debt is dollar-denominated debt. So we've got a structural shortage of dollars, and that shortage of dollars, either in times of crisis or times of boom, tends to drive the dollar higher. So still remain a dollar bull.
According to Powell, the key to unlocking a solution for the debt problem lies in GDP growth outpacing debt growth, which necessitates a shift in demographics coupled with a boost in technological progress and productivity. He predicts that the outcome of the current system will be the degradation of assets and currency, resulting in elevated asset prices and public frustration.
I was living in Spain in 2012, and we just had the massive financial crisis in Europe. We almost lost our banking system, had to buy a generator and tin food, and crazy shit. Terrifying when you lose your banking system. And Cyprus lost its, obviously completely enabled, savings are wiped out. So it was a mess. You had to take cash, put it out at home, try and find gold, all of this. Luckily, the money printer stopped the collapse. Right, big lesson to be learned there. I didn't really still believe that to be the case, which I now do. But at that period of time, the euro was trading about 148.5, 148 against the dollar. And I was living in Spain and I had euro savings, and my business, Global Macro Investor, was billing in euros. And I took the ridiculously brave bet, kind of like this crypto bet. I went, yeah, it's actually just like this crypto bet. I just went, I'm all in on the dollar because this is the wrong price. And Europe's got a structural problem here. And so I switched all of my life savings into, yeah, it's exactly the same as the crypto, just has less bang for your buck than the crypto does. So I switched 100% of my life savings into dollars. I then went and bought, then changed the billing for Global Macro Investor into dollars. And then I went and bought a property, two properties, one in Cayman Islands and one in Miami, because that would stop me trading out of my position, which is what I've done with crypto. Like I started this exponential age fund of hedge funds. So you get locked up for 3 years and stuff like that, ways that you don't outguess yourself, because you'll get these 2-3 year rallies and then it falls away. And we saw huge moves up and down, but that bet's been the gift that keeps on giving. And it also reminded me, another nice story about that trade is I was thinking through this mechanism of asset allocation in that kind of very big global macro terms, right? I want dollars. How do I hold dollars? Well, I can buy bonds, I can buy equities, I could buy assets, real estate, art, stuff like that, stuff priced in dollars. So what you're doing is you put it in dollars, you're now in that currency, and your base currency is that. So then if you buy real estate on top, and real estate goes up 50%, so you get the dollar appreciation plus the 50% or multiplied by the 50%. So it gives you super leverage on your dollar position, but you're still in your dollar trade. And I hadn't really figured this out properly, what it actually means. Now, I could have chosen stocks, but I didn't want to take that risk. And I did have some bonds at various points. And so I would take the interest on that. Bonds went up and the dollar went up. So I made a really decent return from doing all of this trade. And recently I realized that this is the same trade I'm doing in crypto. So if you look over there, you see my NFT, there's my Bored Ape and Punk and all that stuff. They sit on ETH. So you make an allocation to ETH, that's the economy I want to allocate to. And in that economy, I try and buy a fixed asset because fixed assets are scarce and they tend to do well when things are booming. So you buy a fixed asset, which is a rare NFT, or a community asset, which is something different, but an asset or maybe like an equity, whatever. And that, if that does well as well, it gives you the return over ETH. So if ETH goes up 10x and they go up 3x, you make 30x returns. Yeah, you don't think about this, do you? It's a free call option. Real estate is essentially a free call option on a foreign bet. So NFTs are a free call option. Free meaning because some on Twitter or here is going to go, hey, you said they were free and they've gone down in price and I've lost money. What I mean by free call options is what you're really getting is convexity of returns with less risk. Now, if you buy a shitty NFT and you lose money, that is your fault. Let's just get that straight. No, but generally speaking, you buy good assets, their volatility is less. So that Bored Ape has been stuck at well, not this particular one, but the floor price has been stuck at 65 ETH for a year and a half. So it's pretty stable. So what's the downside? Well, in the panic in June, they went down maybe to 55 or something. So the downside's about 55. What's the upside? Well, it's been as high as 3x this. These are great call options to own, and I still have my ETH bet.
Drawing from his experience during the financial crisis in Europe in 2012, Pal shares his investment strategy, which involves allocating assets to the economy he wants to invest in, such as real estate or cryptocurrency. He views his investment in other crypto assets as a low-risk, high-reward proposition, similar to a call option. He advises investors to opt for quality, low-volatility assets like stable NFTs to maximize returns as long as they maintain their value. What do you think about Raoul Pal's macroeconomic outlook and how the value of cryptocurrency will be driven even higher in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.